All right, so when we're talking about trading in the foreign exchange market, we call it Forex for short, as you know. Some people even call it FX. Basically, you're just trading currencies. That's it. So you got, United States dollar, the euro, peso, Japanese yen, the currencies all over the world, and you're trading one for the other. All right. So when we place a trade, they're known as currency pairs, one relative to the other. Now, the currency pairs is typically abbreviated 3 letters apiece, a total of 6 in most cases. And the way we kind of create a value between the two is what's called the exchange rate. So this is how much it costs to buy the other. So when you got two currency pairs, let's say Euro USD, EUR USD, the currency pair on the left is always considered the base currency. Currency on the right is considered the quote currency. So the number represents how much of the quote currency you need to equal one base currency. Okay. Now I'm going to show you that in a moment, but all you simply do is select the currency pair and literally do one of two things. You decide whether you want to buy the market at the exchange rate or sell the market at the exchange rate. Now, typically, people who don't have any investment background, this is a bit confusing because in our traditional way of doing e-commerce or buying things, we can only really buy what we don't have and sell what we already have. But I want you to kind of release that temporarily and just understand that when you place a trade, you will select either buy or sell. Okay. You will select buy if you would like to benefit from the profit or profit from the rise or the increase of the exchange rate, and sell if you want to profit from the decrease of the exchange rate. So I'm going to show you a chart. And we're going to talk about candlesticks in a moment, but let's just look at this first, okay? The numbers on the right, when you're looking at a chart, the price or the exchange rate is on the right. The date and time is on the bottom. You don't really see it in this screenshot, so bear with me a moment. But when dealing with the chart, I'll show it to you on this one. At the bottom is the date stamp. On the right is the price. They call it exchange rate, price action, or just price. So when you're dealing with a chart, you have the requirements are the candlesticks. Now you can substitute the candlesticks for bars or lines, but ultimately you need something to show price action. You need the key of the price on the right and date on the bottom. Also, the chart will be formatted. This chart showing AUD USD, which is the Australian dollar, US dollar. And the format is D. That stands for day, which means each candlestick represents one day of history. Now, I'm going to talk about candlesticks in another video. Bear with me on that. So when you're looking at a chart, it's real simple. It needs to show you what currency pair you're looking at, or in some cases, what stock you're looking at, because the charts look the same when you pull up stocks, gold, oil, doesn't matter, Bitcoin. So chart should show you what currency pair or what graph is showing you, the format, which is it a day chart, a week chart, a month chart, an hour chart, a minute chart, and then you'll have the price action on the right and the date on the bottom. Okay, so that's the basics of a chart and its relationship to the currency pair.